Okay, I haven't seen anyone type that they can't read my screen, so I'm assuming you can, or at least enough. JR said, uh, Jesse, can you go over Intel put and call swings we discussed yesterday? It would be helpful to see what paper was saying, what you were saying. Yep, no problem. So first off, mine is on a weekly time frame, right? So the reason I got into it is look at XLF. Or sorry, I think it's XL. Shoot, what's the semis? XLK, I think. That's tech. Yeah, I know it's SMH, but it was a Spider ETF. I'll find it just a sec. Maybe it was XLK. I guess I can just open up my Thinkorswim and it'll tell me. I am not closing it though. Yeah, I won't manage anything before FOMC because this could all just be posturing for FOMC. Was it XSD? There it is, semiconductors. So here, JR, let me flip to on YouTube. All right, here we go. So here is XSD, right? So not quite full time frame continuity, but what we know as straters to be true is that we go from liquidity and to liquidity, not even as straters, just traders of the market in general. So we go from liquidity to liquidity, right? So if I mark out these broadening formations, oops, what's going on here? XSD. So if I mark out some broadening formations here to here is what I see. And then, of course, most people, if they're drawing and they're not straters, they would draw something like this. But here we would draw something like this from a broadening formation, right? So I'm saying that we're towards the bottom of our broadening formation, which makes us at a high risk of exhaustion. And then last week, also let me know if you can see my screen, okay? But last week we ended a failed 2-down hammer. So we went below previous week low, which makes it a 2-down. And then we went all the way back up, right? And then once we cross back up, every time that you see a failed 2, you should be drawing this Fibonacci to see which what is the 50% retrace. Right? Because if we retrace 50%, we're looking for the outside bar. So we ended failed 2-down hammer. And then this week, we went from 2 down to 2 up. That's the trigger, right? So I'll put here trigger. And this is for the whole ETF spider semiconductors. So then you go over to, well, I have a list, but I usually do this in Thinkorswim, but XSD semiconductors. And then you go in here and find your, I usually want to filter it by market cap. I don't know how to do that. I don't think you can on TradingView, unfortunately. But Intel, right? So Intel is a very strong chart. It's actually coming kind of close to my stop loss. I might pull it down to 23.19. These are for April, so a little more leniency than normal. The only reason this is my stop loss right now is because when we were up at this high, if this came back down, reclaimed, and went failed and is no longer in force, then the bulls are no longer in force, right? So I'm playing on this chart, and you asked how Paper and I could be trading different strikes. What needs to be known for options is that there's different strikes, and with those different strikes, you can play pullbacks, right? So this 1 week chart looks a lot different than this chart, right? This chart, he was correct in saying that this looks bearish. This chart as well. This chart a little less so. This chart definitely not. Right? I would say that this is looking more bullish than bearish. And so the reason I went to Intel after looking at XSD is because I'm looking for strength in this sector. If I go over to NVIDIA, it's not looking too different than, it's not looking too much stronger. Intel has already been at this broadening formation. Paper just said he's pretty much out. Yeah. Well, you had a good gap down today already. I'm down. I'm in drawdown, obviously, but anyway. So this broadening formation, right? The reason I picked Intel is because Intel was a 3-2 and then now a 2 up, so a 3-2-2 shotgun, and so this was also a failed 2 down, almost an outside bar. And so what this trade looked like at the start of the week is this. I think I was a little late to the entry, which is why I'm in drawdown, but I might DCA after FOMC. We'll see. We'll see what happens with this candle, right? So yeah, this chart looks a lot different than this chart. This does scream bearish to me, especially he was probably seeing this. Well, he took an end of day, so he was probably expecting a little overnight move to the downside. But when I'm looking at a weekly chart, I'm still seeing that we have expansion to the upside possible. And so what I was saying about options is that he bought I think it was like the next week's, right? The 328s, and I bought the 417s. So like this little drawdown, I'm down 20%. Paper, let me see if you've alerted. Paper went from 55 cents to $1.10, so 100%. While my contracts went down, I think it was like 25 or 30%. Just spilled that on myself. So I understand it is confusing. When two people who play the exact same system are going against each other. Now, if we were both day trading and like he's buying SPY puts and I'm buying SPY calls, then it's one thing because we're both thinking the direction's doing one exact thing. But with me buying the March 17th expirations, if there is a micro pullback or even just a pullback in general, this one's a gap down, so there is a gap to reclaim. But in a pullback like this, I'm not going to get out of, if I think that this is going to maybe go down, I'm not going to get out just for one day. That's not a swing trade for me, especially not one that's a month out. So I think if it does get down, really my stop loss is not all the way down there. It's more like 23.13, because if we go down here, we have this big old gap that we're going to fill. Excuse me. Thanks for explaining. You're very welcome. Well, with that said, I am going to look over my open swings. So we already looked at Intel. Kinder Morgan looks good still. This needs to be back to a week. So Kinder Morgan was on the same line as XLE, right? I looked at XLE, and then I went to my ETF, XLE, somewhere in here. And then Kinder Morgan's right here. I was asked why I didn't pick XOM. XOM, when I looked, was already kind of, it was kind of in this upper echelon. I think that's a word. And so it was already triggered. Like if I could have gotten it right at the open on Monday when it triggered, that would have been perfect. But I didn't see it. I was looking at too many things. And then Oxy. Oxy is just now triggering. The only thing about Oxy is we're looking for XLE, right? XLE has strength in the sector. So month green. Let me turn this off real quick. Let me get this going actually. That actually didn't help me any. Okay, anyway, month green, quarter green, and it looks like the year green as well. So I'm going through this list now and looking for 212 or 312 ups, anything green. So Oxy is just triggering long. What I would probably be more interested in Oxy is seeing, if I'm looking for a 3 to 4 week play, which is what April would be, I'd be looking for this week to end hammer, next week to go 2 up, and then us to push for an outside bar. So I'd actually be looking at the 56.5 strike. Let me see this. My screen is ultra small over there. $200%. Okay, so 55 strike actually is too cheap for Oxy. It's 15 cents right now. Jeez, these are cheap. I'm tempted, man. I don't want to buy before FOMC, but that is on the short list, Oxy. Let me actually alert that so I remember. Was Hood a break and hold of the downward trend line connecting 218 and 233 highs? Hood? Hood is a tough broadening formation to draw because we've kind of been straight down. Like if you're a trend line trader, this is probably what you're looking at. You said 218.33 highs. 218. Oh, that's what I just did. Almost. Yeah, so you are breaking above, but more importantly than that, because I don't trade those kind of trend lines, is you have a 2-2 rev hammer. Year's green, month's green, or sorry, the quarter's green. Month is red, but it's going to be red all month. Let us look at the internals for the day. So most of the market's green. That's what ad tells us. Tick is flat, to be expected. Valdi Valqd is green. Let's go over here. I'm going to switch this to my lighter colors. So we are green on the day. I'd be shocked if I'm taking anything this morning. I'm here more so to look at swing setups and chat. If something throws itself at me and says, "Hey, I'm going somewhere quickly," then I'm down. But otherwise, I will wait for the next day. Or so yeah, we probably did have some during that teaching stuff, which I'm okay missing because I don't love to trade pre FOMC day trades especially. This price action does look okay. Outside of its orb reclaimed, came and tested the highs as we know to be true, and then shot back up. Now looking for yesterday's highs and maybe March NFPs. Shoot, I hate when it does that. There we go. If you absolutely must trade this morning, I would be looking for some range bound trading. For example, from this high we see on SPY, which is yesterday's high, to what's going on? Why did it, I guess you can just invert your chart. So if price is going against you, just hit this inverse button and it'll suddenly be going your direction. That's hilarious. Was there news on Apple? I haven't seen anything. Let me look here. Where's the news tab? Isn't it over here? Going bonkers. Yeah, I mean, if the whole sector's strong, Apple's going to be the strongest. And when the whole sector's weak, Apple's going to be the strongest. I'm kind of not kidding, but that is how Apple likes to roll. How's the stream looking on the ultra wide? Is it readable or not really? I hope you say yes, but I won't be afraid. I won't be hurt if you say no. Looks Gucci. Love it. And I don't have to crank my neck to see, because I was throwing it on my TV above because it was the right resolution. Okay, let me go back through here. Look at sectors. It's always a good way to start the morning. So before I do that, when I'm looking here on across the board, is I'd be more apt to be buying puts here than or selling calls than I would be. Well, actually, I'd be more apt to sell calls than I would be to buy puts. But either way, I'm looking for this price to not make new higher highs. In fact, I am tempted to. I'm not going to. I'm not going to, but I would love to sell calls. Okay. Vol is still climbing green. As soon as this starts to curl back down, that's when I'd be looking to be buying something to the downside, buying or selling. All right, back to the sectors here. Materials is looking not horrible, but not great. Man, okay. I need this from the community. If there is an indicator out there that just numbers your candles instead of colors and numbers them, I need to know, please. Because I want to see whether. Oh, wait. If this doesn't, I'm going to. I'm so ashamed. My own toolkit does it. That's a crazy thing to do. By the way, the toolkit's free. It just merges all the strat auto fibs if you use that, order blocks, fair value gaps, which I don't use on options, but I do on futures. But yeah, that's crazy. Okay, anyway, now I can tell if it's green or red. Okay, so we are inside green. Materials, green, red on the month. So if this does go 212 up, I'm interested. Communications, not really close to triggering. XLE, we've already talked about. XLE is looking for an outside month. As I said on Sunday, I believe, when I did my market prep. Let me look up here. Entered a bunch of stuff. XLE, possible outside month. And as we see down here, indeed is a possible outside month. So we are very, very close to an outside month. And then if that does trigger, then it's going to go outside 3-2 next month. More than likely. Okay, onward. XLF. That's why I'm in Bank of America. Actually, what I want to do, number one, is get rid of VWAP here. I don't know why that's on. Show VWAP. Get out of here. I do not care about my monthly VWAP. Or my yearly VWAP. Okay. So what I want to do on XLF is look to see if anything is about to trigger. Obviously, like I said earlier, and definitely with XLF being financials, I'm not looking to buy anything before FOMC, but we can look here and go right to left to draw broadening formations. See that we haven't quite extended this range, but if we are going to extend the upside range, the time that we're going to do it is going to be around 53, and that's kind of the same vibe that I have on Bank of America, which is actually just flat today, which is pretty good, pretty strong for Bank of America, considering that something like Intel, very red. Microsoft's not red, it's green, which is mind-boggling to me, but Apple, actually, I haven't looked at this week. Anyway, back here. So XLF, you can kind of see exactly why I bought XLF. This chart looks pretty darn similar, right? But something like this, that's not a good example. Let's go to the XLFs. There we go. Something like Visa, right, does not look like Bank of America. Looking at this top right chart, the weekly, this is much, much stronger, right? So what I like about Bank of America is the risk to reward, right? So I'm risking, even if I do the whole weekly candle, it's not really what I'm risking. Risking 1 to make 3.5. But on Visa, I'd be risking, number one, it hasn't even triggered. But once it triggers, I'd be risking 1 to make 1.1. So that's kind of how you go through when you're looking at sectors, and then you look at whichever chart either gives the highest risk to reward or looks most like the sector itself. So I'm looking at JPM actually now, because this didn't trigger until actually today. So if this gets back above last week's highs, then this will be a 2 down, 2 up in force. And it has a lot of room to go to the upside, right? From a strat perspective, we're looking for it to fill this gap first, which it is working on, and it will actually do before entry for me. And then first target, first magnitude on a weekly time frame is too many things here. Is 266.32. And then what you need to do is understand that this is not going to be a straight moonshot. More than likely, right? I mean, it might based on our moonshot down, but even here we had a little micro pullback. So I need to buy enough time for it to do something like that and then go back down here maybe and then hit its TP. And so then what you would do is you would mark out, or you can throw on an indicator called a TR, which will tell you the average true range of a candle. Right now that is 12. So I know in the average week, this is moving about $12. And then I can kind of, it's probably being skewed by these huge ones, right? $16, but I know this would probably be an average candle. So for me to get from 237 to 266, then we do quick math, which is 30-ish, divided by 12, which is 2.5. So I need at least 2.5 weeks. And then we abide by buying about twice as much time as you need. You can do one time as much as you need, but you better be right. You'll get some huge profits and huge losses. But for me, I like to be a little bit more even keel. So I'll probably be looking at the Aprils. That's my route of thinking here. XLP, 3-2 down week, targeting monthly outside bar is what I said. 3 already. So looking for this to go 2 down on consumer staples. So that's your Costco, your Pepsi, your Walmart. So like I know from experience that I've traded Walmart. Their options are liquid enough. Costco is impossible for me. Procter Gamble could be a 3-2. Is that even a 3? No, that's just a 2. Coke, I have traded before, and then you get near targets. Let's see here. Target. Kroger. What is Target? Target is dead. What in the world? Okay. Back here. Little check up here. Yep, sideways. Sideways. Sideways, sideways, sideways. Okay. What was next? XLRE real estate. This I was looking for a 212 up. 212 down day. Yeah, but then went 212 up on Monday. So here we have a failed 2 up, 2 down on, or a failed 2 up yesterday. Looking possible 2 down, but weekly there's nothing to do, so no reason to even continue looking there. Tech sector, remove the fib. Tech looks a lot like financials, where a lot of sectors looked like this, right? Like if I look at SPY, looked pretty close to that too. So a lot of things are going to be hammered 2 up, but you have to look not just there and be buying everything. You have to look at monthly time frame continuity. And that's what keeps me in Microsoft right now, right? Microsoft looking a little bit different. Well, maybe not so different. But Microsoft, as soon as it was reached this 30% retrace that I saw yesterday, which is the reason for my entry, I'm targeting this 376. I think I bought the 375s. So hopefully that, you kind of put, I bought the 375, 370 put debit spread. Yeah. And then, so like I said, you can't just be buying everything that's 2 down, 2 up, because we have to look at monthly time frame continuity. Here, month is red, quarter's red, year is red, chart is red, and at the time, week was red. So That is the reason for that. So XLK, we went to real estate, telecom. Nothing really. Not everything was triggering this week, which is perfectly fine. Oil, gas, we already looked at energy, but oil, gas, 212 up on the month or on the week. Now looking 2 up on the month, or sorry, just a failed 2 down on the month, but green. Getting some continuity there, so I'm actually, if I'm not mistaken, I looked at this and they do have a lot of overlap with XLE. Yeah, ZOM, Oxy. CVX and Oxy I was already looking at. Oxy's triggering. I'm so tempted to get Oxy. We'll see. It's really always looking at, yeah, Devon. KMI's not in here that I see, but Conoco, Phillips. So this is a good example. So look at Conoco Phillips month, quarter, year, right? All is green. Then and it's in exactly the same setup as Oxy, 212 up, but the month, quarter, year is green, which tells me that people who are involved in ConocoPhillips are more bullish than they are on Oxy, because Oxy is all red. So actually the better trade for me would be to take this setup that I saw on XOP and take it on COP, ConocoPhillips, because ConocoPhillips is the stronger of the two that I was looking at. Right? So Devon could be another good one. Then I said CVX. I didn't look at that one. Yeah, CVX just a strong 322. Go back here for a second. Sideways. Okay. Pharmaceuticals. A good thing you could do is just look at this bottom row for me. And if these aren't aligned, then it would have to be a really darn good looking chart for me to be taking something up here on the top when the bottom doesn't align. Right? So the bottom on XOP, and they don't have to all be green, but they have to at least be, like this one is green, this one is a doji, so these ones would align, because if I take a call, then I'm expecting price to go up, and if it goes up, this would flip continuity. So pharmaceuticals, not all on the same page, but also not the best looking chart that I've seen, so passing on that. Let me get rid of this here. Semiconductors. Is that how I got into this? Oh, yes, it is. XSD. So semiconductors, hammer 2 down, 2 up. Month. This is where I said that the chart has to look really good. Month, 3 month, and year are all red. So stratters, we would rather be taking things short. Like if you asked Paper or myself, would you rather be taking a long from down here to the upside, or would you rather take a short from up here? Oh, well, it would probably help if I did the right one. Or would you rather take a short? I would venture to guess that both of us would say short. We would rather be shorting with full time frame continuity than longing against it. But like I said, this chart looks good to me. The day and the week both look like, as soon as we get out of this little range here, that we are going to shoot up higher. And as I said, Intel I'm bullish anyway. Like in equity, I'm bullish, and it's already stronger than the rest, and it looks like it wants to push this broadening formation. So that's the reason for the trade. But if I stop out, it very well could be that it's because the full time frame continuity is red, except for I guess it's not full time. I was looking at XL or XSD. So XSD full time frame's red, but on Intel, it actually, this is probably why I got into it. Like I said, probably 5 minutes ago during my rambling, it's okay to take trades that are against full time frame continuity if it's a doji, because ideally that doji is going to move with price and flip from one to the other. The year, the quarter are green. The month is almost a doji, and then and actually when I took this, it could have very well have already been a green month. So anyway, I'll keep watching that. Keep going here. Software, not interested. Real BC, I saw you say tag paper and said GLD might be a short now. Thoughts? Good luck. It might gap fill the daily for like 3 points, but yeah, I don't look at this chart and say short. Not yet, at least. You definitely have to be mindful of every high because you could be extending and finding an upper range of a broadening formation. But I mean, when the month, the 3 month, the year, the week are all really green, I definitely wouldn't be shorting it this week. Unless you're doing a overnight swing, in which case the year and the 3 month don't matter really for an overnight swing at all, actually. And you're looking for just a gap fill down to 276, but we're making higher highs and higher lows, not lower highs, lower lows. SMH semiconductors, pretty much what I already saw. Defense stocks. What's in here? LMT, Boeing. Oh, Boeing. Holy. That's interesting to me. Yeah, paper said FOMC will tell. That's pretty much exactly what I've been looking at saying this morning. Is there's I'm definitely not opening any swings before FOMC, but anything before FOMC usually is just posturing for FOMC. We're just waiting. We're all just waiting for that. Almost done with these. Junior gold miners, pretty much same chart. Biotech shorts. Regional banking shorts. So when I'm saying that, I'm looking at this bottom line and saying, what should my bias be? And then I'll look at the top two and say, is there a setup? So short on regional banks, no setup on the top. Jets short. Nope. Yep. All right. No triggers after that. Just sideways. So if you guys, as always, if you have ticker requests, feel free to send them in. Yankee, would you not be interested in the other banks as well? Yeah, good question. So Yankee probably asked that when we were looking at XLF while I was in member chat instead of the stream chat. So XLF, right? We're bullish. A strat at least on 4 of the 5 time frames. Monthly, I wish were flipped, but it's not. So he asked why I'm not interested in JPM, Wells Fargo, Morgan Stanley, all that. So let's look at the sector XLF. So number one, you're looking for charts that look pretty similar. And I think I did say that I'm interested in JPM now today. But when I entered Bank of America, it was still not triggered yet. It was still inside. And I'm not going to take anything before FOMC. So you might see me enter JPM March. If I remember correctly, I usually spread that out. So I'd be looking at probably like the 265, 270 spread. Which is, oh no, the 265s are only 70 cents. So I'd probably buy those because that's my target, right? 266.32. And if it expired in the money, that's up $1.62 from 70 cents. What I could do instead, which is probably what I will do, is buy the 260s for $1.10. It depends where price is right now, or not right now, where price is after FOMC. But I'd probably look at the 260s because $1.10, and then if it hits TP, those are up to $6.32. So way over 100% for only $30 more risk. But yeah, so I'd be looking at once I have a sector that tells me what to be looking at. That's when you dive into the sector and see what charts kind of look like that. So before, my scanner was doing this. The sector thing is somewhat new to me, not how sectors work, but looking at sectors, then going into the sectors to look for similar charts. Because before, my scanner was doing that, and it still does, but this is just a way to do it without me filtering between the two charts. Because I do my scanner in Thinkorswim, and I like to chart on TradingView. It looks a little cleaner, and it's easier to use. So if I'm looking here, and then I look at Wells Fargo. Wells Fargo actually looks pretty good. Morgan Stanley. Morgan Stanley is red across the board on that bottom row, right? So if I'm looking between two stocks here, Bank of America is actually red across the board too. So between all those, Wells Fargo actually looks the nicest for calls. But everything's red on the month. So then you're just looking really at the quarter and the year to see what's the closest. And while we are red on Bank of America, this is still inside bar. So I'd expect us to test one side of the range or the other. I don't love that the lower time frames are against me on Bank of America, but like I said, low risk, high reward. This is a 3.5 RR trade, which means I have to win 1 out of 3.5 trades. So what's that? 25% win rate, a little higher, 30% win rate. And I break even, but actually with option volatility, it's actually 1 in every 2 probably. Or sorry, 1 20%. Jumbling my words. I really have to win 20% of these to break even. Because Bank of America already hit, I think I trimmed it 35 or 40% already, and we're only this far up. So if it went down here all the way to the bottom, I'm probably down 80%. But really now my risk is right here. So I already hit 1R pretty much. So hopefully that answered. When I'm looking at going from sector top down and then looking into that sector, so this is why I bought Berkshire this week. Berkshire was a 2-2 rev. And if I would have held overnight, it would have made like another 100% at least, I think. I trimmed at 1.7. I looked yesterday and it was at like 2.7. I was sick, but I didn't feel comfortable with that because it was this week expiration and I wanted to buy next week's. So I just closed and, I'm not going to reopen now, but just because it already triggered. But yeah, you start from the sector, then go down and see what chart looks the best in this sector that also goes with your trade idea that you already have, right? So I'm looking long and I'm looking either for highest RR or solid risk to reward with a stronger ticker, which would kind of be Wells Fargo here. Stronger ticker in the quarter and the year are green. Month's obviously very red, but risk to reward here, you'd still be pretty solid, right? Because your weekly magnitude's at 1.5. So while Bank of America is much riskier, it's because I have a higher risk to reward. Wells Fargo would probably be the safer of the two, I'd say, as you can see right now. I mean, today it's a 2-on-2 up today, while Bank of America is an inside bar. You're very welcome. Just going range to range right now, I think. Look at Apple giving back almost all the gains from this orb high. Everything kind of rejected its high yesterday. Apple obviously broke through, but Microsoft rejected, SPY Q's rejected. It is very tempting to take like Amazon short, but I'm not going to. Told myself I wouldn't this morning. Okay, nearing the end of the morning session for me. See, this is kind of why I said Amazon looked really good and then I backed off because, hey man, how are you? This is exactly where I was looking to go short. And then it shot back up and now it's going sideways and the rest of the market's looking a little stronger. I don't know. Paper, what do you do on FOMC morning? You sit hands on bud or are you willing to trade?
You really got to just nix it because the
Yeah.
market will start to go really sideways.
Right.
Uh, and setups will it'll be like a Friday. Setups will look really good, and then they'll just barcode.
Yeah.
Like I took Tesla off Tesla long off yesterday's high retest, uh, and I had to quickly and so like I had to quickly trim it, and then I stopped out in green because it came back all the way retested again. I'm currently short Apple. I had to chase it a little bit, so I'm small, looking for like a prior day high retest. But I net, we're very close to NFP highs. I think that we could break NFP highs today if and only if um, the market likes the dot plots, but we don't have to, right? We could totally stay stuck in the range. So I think your TBD in general.
Yeah. What have you looked at what the market's expecting for these numbers?
No, no, because like I'm gonna be. It's gonna take it would take a lot of time to do that and like a lot of brain power, and I want to be able to react faster
I th-
today, and then I'll digest that stuff later.
I thought
Um,
I thought there was a site you used that said what the percentage is
oh,
for.
CBOE Fed Watch tool
Okay.
for sure. Yeah, that's available. But for the dot plot, it's a little bit different because it, it's the dot plot is like multiple quarters out.
Oh, gotcha.
So it's like they'll give projections for here, and I'll just compare. I'll just drop that ticker or the this Jesus.
You said it was CBOE FedWatch.
Here, I'll just drop it right
Okay.
there
I guess
in
I can
chat.
just hand over the stream if you're streaming it.
No, I'm watching a trade right now, so I'm trimming my Apple short.
There we go.
Hey, the Intel, I'm I have a little bit left. I might roll down, but I think you might be too far out of the money and not enough time potentially because Intel
Yeah.
moves weird. Like I actually took next week's strikes because and I really didn't mean to hold it for very long just because the way that it moved and I needed it to go through the money because the way Intel options move. So it might be more like a December 25 call uh, for upside if that makes sense. December's like way the frick out there. Um, but it's a shitty IV on that. So you got to get that full like whatever. Um, oh, you on it? Yeah. So hit compare.
That's just a screenshot where. Here, let me pull this down and share.
Can you hear Miss Rachel again?
I
I'm
owe Miss
trying to
Rachel's
help
child
out.
support.
Yeah, trying to help out mom a lot more. Uh, but if you go to the website, then you can hit compare. Basically,
Yeah,
uh,
let me
I
switch
mean,
screens.
it's nearly 100% probability for no rate cut for now. You'd have to go out to June. June probabilities have gotten lower
Where do you see compare?
on the left hand
Compare.
side where it says current. You get to compare. Yeah, so then you can see how it changes day to day, week to week. And if you want to see like the full year out, you actually have to go to January. So January, there slightly pricing in 3 cuts for the year.
So we're at 4.25 right now. Is that right? 4.5.
Yeah.
Yeah. So 3 cuts.
Yeah. So whatever dot plot they come out with, then that'll. I mean, even if I look at July, they're pricing in 1 to 2.
What is
One.
dot
They're
plot?
pricing in one between now and which is 4 FOMCs from now. It's a long time.
Yeah.
So I don't know if that's. No,
So they're not expecting a cut till
July.
Jeez. Yeah,
I mean,
June is
maybe
kind of.
June.
I mean, that's going to push
Yeah. So they're
push
they're
us
they're
down,
saying like
right?
June is a 50-50, unsure,
Yeah.
and then July is like maybe.
Yeah.
So they're thinking that cuts come in June, July.
Then September.
Then September is a pause, possibly
Yeah.
50-50
50
pause.
50.
Yeah.
That's crazy. I mean, that's going to push us down, no? Or do you think that this is
Well,
part
that's
of.
what I mean. Like today, I gotta turn this off. But so today is like, um, I if that's correct or maybe it's too aggressive, then the market can move based on the dot plot, which is basically like their forecast. They're gonna tell everybody what our forecast is.
Gotcha.
Like, are you wrong or are you right? Or by retest here on Apple. I think you can breach it just a little bit, but I don't want to be super greedy. Dude, Snowflake is still a shit stock, by the way, if you were wondering.
I actually don't think I've ever invested equity into Snow. I don't even know what it does. I just traded the chart.
It's it's
I don't know. This little breakout retest.
well, it's like the 15th retest. Some shit. You hungry, dude? What do you got? Apple coming in for that prior day retest. Finger on the trigger. 220, maybe 235. It's slowing Apple. It's like a straight shot downside, but like slow grind. All right. I almost got a triple on my intel. Not quite.